Welcome back to Griffin Uncut. We're joined by the very lovely Phoebe, Client Solutions Director at Griffin. Hi, Phoebe.
Okay, how's it going?
Oh, and hi, Mo.
And hi, Mo.
Uh, when I think of Phoebe, I think numbers, I think models. But interestingly, Phoebe is also a lawyer. Phoebe, do you want to tell us how you made the transition from law to crunching numbers?
Of course, I just really love Excel. No, my career choices were not driven by Excel. It's a good question. So I grew up with a grandfather who works in the city and probably knew more about the city, mainly like the long lunch bit because this was the 90s. So the golden era of the city. I was very disappointed when I started working in banking and didn't have 3 hour lunches. But yeah, I grew up in a family that was quite tied to financial services. Um, and whilst I really liked the idea of being a lawyer, um, very good at yapping. So I thought at school that would kind of lead me quite naturally to a career in law. I did the degree and found it quite challenging to engage with. I didn't find it particularly interesting. Like the academic study of law versus practicing law is very different, but I didn't find it very motivating. And I realized I've just teed up to say that I find financial services much more intellectually rewarding than law. But the funny thing is, I did. It was something I was interested in. So I did a law degree. My first few roles were in legal. So I worked at two very large banks on the trading floor in legal. Um, Loved the environment I was in. Didn't love doing contract negotiations day in, day out. It didn't make me tick. Um, but really loved the context, loved financial products, loved understanding the economics of it, how it affected the wider world. Like I found commodities trading really interesting. Again, I'm coming off as like this incredibly dull person. And I probably am, like no one wants to sit next to me at a dinner party. But I found it fascinating, and had decided that whilst I loved working in financial services, I really didn't want to be a lawyer in a financial services context. So I moved into like a really interesting and quite unique role. So I worked at the European Bank for Reconstruction and Development, which is like a World Bank equivalent in Europe, Central Asia, and North Africa. I was based in London and I was in a capital markets team which looked at the kind of regulatory landscape of our countries of operation, looked at the funding markets, and kind of pulled together these investment linked projects where one team would kind of change the regulations so we could issue funding market instruments with the central banks and the ministries of finance and the stock exchanges. And then another team would invest in the product that the framework had been created for. And a big driver of that team was to push um, not so much individuals, but definitely SMEs and businesses away from bank funding post 2008, because what you saw in a lot of frontier and emerging markets was there was heavy reliance on bank funding when banks were liquid. When you have something like the global financial crisis, banks retreat out of these markets. You're kind of taking away any funding mechanism for small businesses in their own currency. Um, and it can devastate an economy, being quite blunt with it. So we worked a lot on kind of funding and debt instruments with these national banks, your Ministry of Finance, your governments, and the local banks in these countries to kind of fund an economy not just through bank loans, but debt listing, mini bonds. Really love that. Spent a lot of time digging into financial regulation, legislation, and spent a huge amount of time on capital markets products, how we could structure them, how you make them more accessible for less developed markets. Even looked at market infrastructure, CSDs, great topic, not incredibly dry, but I won't bore you with it today. And kind of from that, started picking up that the winds were changing, fintech was having its moment. I was working more on the debt side of capital markets, looking at a lot of lenders in our country's of operation, or kind of issuing bonds, issuing debt, looking at subordinated debt and loan syndications, and ended up moving to a great non-bank lender called Liberis, who I think were like one of the pioneers of embedded lending. My old boss Rob will love me saying that. I'm sure that'll end up somewhere on LinkedIn. Um, and was their chief of staff for 2 years, kind of working on scaling the business, expanding it. And through that, met David, um, Griffin's founder, and came in as one of the very early employees. So went on this very kind of strange journey from negotiating synthetic prime brokerage contracts and futures contracts to changing or trying to change regulation to invest in things to then early stage fintech in the UK. So yeah, that was a bit of a roundabout journey, but joined as employee number 4 or 5 at Griffin at the beginning of 2020.
Quite the transition. You mentioned you joined as employee number 4 at Griffin. Why did you decide to join Griffin so early?
It's a question I ask myself every day. I'm joking. It was genuinely a great idea. So I'd spent a lot of time, I'd worked in large banks, I'd worked with banks, I'd worked with regulators. I then worked at a non-bank lender trying to get bank accounts, especially as the kind of expanded out of the UK. And it was really difficult. Like no one wants to bank you a lot of the time. And I guess it was like one of these kind of very fortuitous series of events. But I'd just gone through this expansion at Liberis, and we spent a lot of time talking about like how we were going to get onboarded with a bank, who that bank would be. And then got introduced to David, and he was like, I'm building a bank for non-bank financial institutions. And I was like, yes, you are. This is an excellent idea. I've just lived through this pain. So I loved the idea. I could see how it worked. As I've already said, I get very excited about financial infrastructure. And not many people do. I'm not saying that you should, but to be interested in it is a bit of a niche. So it was kind of a meeting of interests. But I spoke to David. I had an interview with Alan, who's our other co-founder. And I was like, these people are so smart. Like, this is a great idea. They're really, really smart. Like, admittedly, when people were like, I haven't built Circle CI, I was like, I've used a computer, but that was pretty much my knowledge. But they were so smart. It was such a good idea. And they were excited. And it just felt like a really natural, easy decision to make, which sounds like a bit of an oxymoron because joining a pre-seed / seed startup very early on without a bank license, like I think the week I joined, we started writing the application in earnest. Shouldn't have been such an easy decision, but I remember coming off the first call, turning around to one of my family members and being like, I want it. I will bite someone's arm off for this job. So yeah, that's how I ended up in so early, and it was an easy decision actually.
Was it not scary? Like, if someone's considering being employee number 4 at a pre-seed startup, like, did you not feel scared at all?
Yeah, I was terrified. But I figured that if it didn't come off, it would be a great anecdote. Tried to build a bank. It's like that James Acaster meme, right? Like started, had a disaster, bon appetit. Like you can apply that to building a bank. I really shouldn't. I didn't think I'd be referencing Great British Bake Off memes, but here we are.
Don't worry, we put that in our end of year wrapped email last year to our entire database. You're in good company. Yeah.
Yeah, it was scary. And then it was compounded by a global pandemic, which was a weird time to live through. But I figured the opportunity to do something like this comes along quite rarely.
Yeah,
And sometimes you just got to take it.
that's a good
And
point.
worst comes to worst, it's an anecdote.
Yeah, that's a really cool attitude. That was very cool. And you've said that already, that first of all, yeah, the opportunity doesn't come around very often, but also there's not many people in the UK or even the world that have taken a bank from pre-license, so from application through to today, where Griffin is a bank. What's that like?
It is, it's a marathon, not a sprint. So, I don't know if David mentioned it, but when we started it, we were like, it's going to take 18 months end to end. This is what they've done with Monzo. This is what they've done with Starling. We're just going to do this, this, and this. The documents need to be this long. And we're really excited at the beginning because I was like, we're going to have customers by like the spring next year. 4 years later, we became a bank. But it was incredible. So as I mentioned, team was kind of pulled together. We hired through the first quarter of 2020. We got the office I'm in now, and like this is huge. 12 whole people. How will we ever fill these desks? And then the pandemic hit, and in a way, Griffin was great for the pandemic because I was busy. Like we were designing the bank, we were writing the application documents. We were a very small team for the first 2 years. I think we are actually still quite a small team at Griffin. It's not a big bank. And so everyone kind of became experts in really weird niche bits of regulation because we had to. So the application and the design phase was long. I think it took us 2 years before we got the green light to put our application in. It was very intense, but it was so intellectually stimulating, challenging, exciting. And then we kind of moved from the apply and design to build. Build was intense, and then we went from build to launch and then sell, and now we're kind of moving to BAU. So it's been like 4 different jobs over 5 years. And it's been intense, but it's been fascinating. And it's been really exciting to see this baby bank that we imagined and wrote about. Like when we went live last year and we could have got the first customer MI through, I was so excited just to see the payments going backwards and forwards and like the accounts being opened. Because it's so rare that you see something from kind of ideation through to in life.
You must have been like, hey, I wrote that in page 1046 4 years ago, and now it's working.
Yeah, or in theory, I wrote that and I'm so glad that you've changed it. And it works in a way that works. But yeah, it's really cool.
Wow, that's fascinating. It's such a cool journey you've been on. Now, today, Phoebe, you're the Client Solutions Director, as NK said. What goes into designing a solution for a customer? How do you go about that?
Um, as you might have guessed, it involves Excel. Or actually, we don't use Excel anymore. We use a very shiny tool called Causal. But so solutions kind of sits in commercial. We don't do like the very front end of sales. We don't necessarily get involved in all sales now either. But so like the first cohort of customers and like first customers from sectors or using different products, we sit in between the customer and the sales manager, product, and our treasury function effectively. And we work with the customer to configure their business model onto Griffin in a way that works for them, optimizes for their operational processes, aligns with their revenue models, helps them meet their regulatory requirements if we're looking at PSD 2 or 3 firms or CAS firms. And so what goes into solutions is kind of their data, if they've got an existing book, how their customers behave, how their revenue model works, their projections, I'm a big believer in all models are wrong. So if people are reticent to give me projections, like, it's okay, I haircut them anyway. But we just want a view of who your customers are, what they do when they're on board, how many payments they make, what their deposits do. And this isn't just to optimize for Griffin, it's to optimize for our customers and their customers, because at the very essence of it, we provide accounts and payments. And then there's a huge amount of complexity underneath that. I know you guys just done an episode on how we calculate interest. So I don't think Jorge would be very happy with me. I'm just like, oh, it's just accounts and payments. But the value we add, and what I think is really powerful about Griffin, is we take quite simple things, we let people build them into their business models in a way that either lets them offer their product, makes offering their product easier, lets them offer new products to new markets. So we kind of a bit like an internal consultancy for customers. We help price, we work out the flow of funds with them. We are the initial kind of gate before it hands off to our engineers. And also just a lot of research. Like one of our first customers and one of our first cohorts that came through were residential lettings platforms, because there'd been a law change and they now needed to hold rental payments for landlords and client money. And I went deep into the Tenancy Act 2019 in a way that I never thought I would. But there's a lot of research involved, but I like it. I like amassing knowledge. I like boring people at dinner parties about where your rental payments go.
This is your law background actually
There we go.
helping.
It's all
Yeah.
come full circle. So yeah, that's kind of what goes into the solution design. And sometimes it's really simple. Sometimes it's just you're a payments firm, you need a safeguarding account. And then other times, and I guess we're about to get to this, but we work with kind of non-bank lenders who want to give better credit deals to their customers, and we can provide account infrastructure that maybe secures their credit line against a cash balance or kind of streamlines repayment mechanisms so more can be advanced. So yeah, we really get into the nuts and bolts of it, and create lots of flows of funds diagrams, lots of models. Mo and his team very nicely take the world's most hideous funds flow diagrams and make them showable to the outside world, which I'm forever grateful for. But yeah, that's kind of the solution design piece.
You mentioned non-bank lenders. Just to bring this to life, can you just zone in on non-bank lenders and tell us, like, if you were designing a solution for an hypothetical non-bank lender, what does that look like?
Sure. So with non-bank lending in general, you've got 3 counterparties that you're solving a problem for. And we only really contract with one of them. So we work with non-bank lenders, they'd be our customer. But then the other 2 counterparties in this, and non-bank lending in general is quite complicated. Non-bank lending, you don't have a deposit base that we as a bank would have. Like, you haven't got depositing accepting permissions. You can't just roll out a book of term deposits to then lend out against your own balance sheet. You have to find funding from somewhere. Sometimes you might be really lucky and you can just fund it off your own balance sheet. But a lot of the time you'll work with a credit fund who'll give you a structured facility for you to lend out. And credit funds, to get comfort around what their customers are doing, so the lenders that we work with will structure deals in a way that, so Mo has a company called Mo's Loans. And Mo provides SME working capital to just any sort of SME across the board in the UK. Mo will have a facility with a credit fund that's going to have certain covenants attached to it. And he may have a facility for 100 million, but he doesn't access that all at once. That's kind of tied to the performance of Mo's loan book. And so what tends to happen is Mo will have to send data to the credit fund 3 or 4 times a week of everything he's originated, everything that's been paid back, everything that's defaulted. And as much as I love an Excel, you have like the most unholy selection of spreadsheets that have to be worked through to get a view of what Mo's doing. And then if you're Mo's customer, and this isn't really just specific to lending, you see it in rental payments as well. Direct debits solves this to a point, but if you don't want to use direct debits, you need to know where you're paying your loan back to. You don't want to be in default. There's a statistic somewhere in the depths of Griffin that most missed rental payments are purely through the fact that the tenant doesn't know which account they're paying back into. So Mo's borrower wants to repay their loan. Mo's going to have a big reconciliation layer that he's going to work through to say that Phoebe's paid him back for that month, and she paid it into the right account, and he knows it's coming from Phoebe. And then Mo has to push that back to his credit fund to say, Phoebe's repaid her loan, so can I lend more money out to more people? So we're kind of solving for these three parties with different needs. And this comes back to my great accounts and payments. It's very simple. But the way that we work with non-bank lenders now is that we may provision the borrower with an account that the money's funded into and it's paid back into, and it's their account with their name on it. And so Mo's like, yeah, Phoebe's paid it back. Have it as a ledger entry. I have it as a payment on my ledger as well. This account exists. I can then route that back through to what I need to repay over here. I've been able to make the payment easily. I feel good about myself. I'm not in arrears. I'm not under a collections process. And Mo has more confidence in me as a borrower, right? Because I'm paying that money back. I'm becoming more creditworthy. If I need a big facility, if I want to renew, he knows that my payment behavior is doing what it's doing. And in theory, Mo could just buy loan management software that would pick this apart for him. But that loan management software wouldn't actually be responsible for the payment flow underneath it. It would just integrate with the repayment flow. So it would help Mo pick out that I'd repaid, but it wouldn't necessarily do the whole picture. So I've got an account I can pay back into. I pay back into that maybe through FPS. Maybe I do it through open banking with variable recurring payments. May collect through direct debit through someone like Go Cardless, and that can be swept into this account at Griffin. So Mo's got this configurable structure where his borrowers are paying him back, and he can evidence it really quickly. And the other thing that we can do at Griffin that we do is we can give Mo's credit fund view-only access of that account. So he can see that Phoebe's paid Mo back, that money is flowing back through into a collections account, and then it's going to go back to that lender, or it's going to be lent out again. But we're providing a huge amount of visibility, which usually is only gleaned from these enormous Excel files. It's a better experience for Mo. He hasn't got to employ 4 or 5 people full time just to unpick the reconciliation of who's paying what back when. And it's a much better experience for me, the borrower, because I know where I'm paying it back into. I'm very comfortable. It's the beauty of confirmation of payee as well. I can verify that I'm sending it to the right place. And in an ideal world, if I've been a good borrower with Mo and I repaid on time and he has all of this data on me, if I want to renew my loan product with him, he's got enough data that can go into the underwriting process. And that might be that I come in at a lower rate or I have a higher credit limit. And so this quite simple kind of configuration of accounts and payments just provides a huge amount of visibility across the lending cycle. And it means that as lenders, you can do quite innovative and cool things. So I might be a new business. I've only been in operation for 6 months, but my business is going really well. If you take that from like a traditional underwriting view, I would have quite a low credit limit because I'm a new business. And so you're taking a lot of risk on me. But I might have a little bit of startup capital. And so Mo might say, okay, Phoebe, put a bit of your startup capital in an account and we can raise your credit limit to whatever that startup capital is that you can spend. And so I can I can buy something for my business that I desperately need in like a blended debit and credit model, because Mo's given me that functionality through the Griffin account. And that's really exciting if you're me and you find these things exciting. But it's creating more opportunity and fairer credit for kind of your end borrowers, and more comfort for your credit funds, and an easier, more pleasant experience and efficiency for the non-bank lenders themselves.
And this is not just like for B2B lending, but B2C lending as well. Because I reckon the example you just gave sounds very similar to what Yonder's doing.
Yeah, yeah. So it's very, very similar to what Yonder's doing. So Yonder embeds our accounts, and part of that can be it increases my credit limit because I overpay on my bill, and so I have another £300, another £1,000. And I'm kind of, Yonder can give me access to a card that I may not have access to. And like what Yonder does really well is, if you're from the UK and you want to access financial services, and if you're like me, you're incredibly boring and your whole family is from the south of England and like, you know, still live within 10 minutes of each other, which I love. I find it really easy to access banking services, loan services, credit cards, savings accounts. I have address history. I have a credit score that has been in existence since I turned 18 and I took on student finance. Like, it's very easy for me to access financial services, get a great credit limit, maybe to my own detriment. Like, sometimes I'm like, I do not need to be able to spend that much, but thank you. And that's great for me. But if I was from France, Australia, or anywhere else, and I came to the UK to do the job I'm doing now, my credit limit would be minimal because I don't have a credit history here. I'm earning, I can repay my debt, but it doesn't matter. I need to actually build out a credit history in the UK to access like a wealth of financial products, especially from existing providers. And this is where Yonder does an excellent job. And I love Yonder's product. If you don't have it, it's great. I'm not endorsing it, I'm just saying it's great. It's a rewards credit card. It's a great app. It's super easy to set up. The onboarding flow is lovely. But it also helps people access financial products that they need without being Phoebe, who was born in Essex and now lives 45 minutes up the road in London. And these kind of use cases with Griffin for B2C are really, really exciting because we have a enormous breadth of financial services in this country, but it's still quite a narrow section of society that can access it. And what Yonder's doing is really, really exciting, and it's also pushing us in a much fairer direction.
What are some of the challenges you've come across, like while crafting solutions, especially for like the lending sector?
Sales commercial is always an uphill challenge. I'm joking. Our sales cycle is quite fun. In lending especially, so parts of lending are still pretty old school. It's very relationship based. And there's a huge amount of data you have to harness. So some firms have built their own solutions, and while they're not perfect, they're sufficient and they'll get them over the line. And when you're kind of solutionizing with someone, when we're asking people to kind of move on to us and build with us, it is uplift. It is going to be work, and so you kind of have to balance out: are you letting perfect or better get in the way of good? And not everyone has a big engineering team. Not everyone has the resource, the roadmap resource to build this. So I think you have to have someone that's a firm that's willing and has the time and the capacity to bring this in, because there is upfront work, there is longer term benefit, but that's a hard decision to make when you're running a business, especially if it's VC backed. You have finite resources, you want to push on the path to profitability. And we can help you with that, but there is effort involved. So a lot of the time it has to be the right time with the right customer who has the resource to do this. Another part of it is sometimes turning around to your credit fund and saying, oh, we're going to work with this cool new bank called Griffin. And they're like, well, I've looked them up on Fitch and they're not rated. Who are Griffin? We have to take people a bit of an education journey that whilst we're a newer wave of banks, we are fundamentally no different from any other bank who's dual regulated by the PRA and FCA. We haven't got a credit rating because we don't issue bonds against ourselves, and we won't till we're at scale. We've only been in market 2 years. You know, people need to take a leap of faith on us. And with lending, it's not just our customer, but it's also the people that are providing them with their credit facilities to lend out. And, you know, the banking system has not been without its moments in the last few years. SVB went, Credit Suisse went, Barclays went down for 3 days this weekend. Loved that. And so placing trust in a new bank is scary, and I appreciate that, but that can be a challenge for us. So I think it's hitting that sweet spot. It's that Goldilocks spot with us where a customer can work with us, they see the value, they've got the funding, and they've got the roadmap, and we can really add value, because I think Adam did one of these episodes earlier. We do obsess over solving problems for our customers, but if you don't have a problem, I don't want to sell you something that you don't need. So yeah, it's a combination of those factors.
And then if we zoom out a little bit, Phoebe, you've been at Griffin 5 years. Like, even listening to this, it's amazing. Like, going from bank application to you're going right into the detail of how the lending sector works and how all of these different parties can benefit from this. But from your perspective, Phoebe, what's been like the most rewarding thing so far in your Griffin journey?
There's definitely a tie across a few things. I don't think anything will beat the feeling of pressing enter, which I think 5 of us did together on the bank license application. There's a picture somewhere in the depths of Slack. It was so surreal because it had just been 2 years of work, and we were handing it off like it was out of our hands now. It was with the PRA and the FCA, and it was surreal, but it was this enormous, overwhelming sense of achievement. So that was a real highlight. I think seeing the first customers go live as well was just fascinating. It was really exciting to see. And then it's also getting nice feedback from our customers. Like, the first bit of nice feedback we got when we were live was, it's like your kid winning a race at sports day. It's like, it's on the fridge. I was like, I can't believe that we've built a bank, people use it and they like it. So yeah, those were kind of the three like real big high moments, and I guess they're all linked together. But yeah, I guess
I
the next
remember that photo. Yeah, everyone pointing at, not far from where you're sat right now. Yeah, yeah.
yeah. And you know, I'm hoping like the next one is when David rings a bell because we've IPO'd, and that'll be a good moment. But yeah, we'll see when that comes through.
And what are you excited for 2025?
Cool. What am I excited for? I think we're moving into BAU to a point, right? So we've had customers live, kind of, hopefully. We've had customers live for the last kind of 7 months. We've kind of done the really, really hard bit, and I think I can't believe I'm about to say this. we're going to have real data by the end of this year. Like, I'm going to be able to observe trends. We're going to understand how people use Griffin. We're going to actually watch the bank exist in something that's kind of out of launch and is nearing BAU and kind of reaching that next stage of progression. And I'm really excited about our pipeline. I'm excited about the customers we've just signed. We've got some really cool customers coming on board. And I'm excited to see those products in market for the wider market. And I guess actually this is one point that it is a highlight, like seeing Griffin's products out in the wild and using them as well is so exciting. And I think the kind of next cohort of customers we've got and the pipeline that we've got, seeing that range of financial products kind of going out into market. And I'm convinced of their impact pre-launch, but actually seeing that impact post-launch, I'm really, really excited for, because I guess that's like one of the best things about working at Griffin and working in this model. We can support an enormous range of products for like every end of the market. And you get to see like the real world interacting with what we're doing. It's just super rewarding. It's very exciting. And I think everyone says, I really love our customers. I love our prospects. I even love the people that reject us and go and work with someone else, because a lot of the time you're just building really cool, really innovative, really inclusive products. And then it's exciting to live in this world. Like I love talking to our prospects. I love talking to our customers. I love seeing the problems that are being solved. So yeah, that's what I'm excited about 2025.
That's super cool, Phoebe. And I think I feel very lucky to be able to work with you, because you manage that breadth of like use cases, and then you design these solutions. You jump into the lettings. I've forgotten the name of the legislation, but you know the one I'm talking about. And I think it is so amazing how you do that, and it helps Griffin serve society in these incredible, like, scalable ways. So it's been super fascinating to learn a little bit about what you do, and I'm sure you'll come back and tell us about all the things you're going to do this year as well. But thank you very much, Phoebe. Yeah.
Great.
Thank you, Phoebe.